What's up, everybody? Warm hello. How are you doing? It's Friday. Hope that means everybody's got great plans for the weekend and you're feeling good. And I'm feeling good and I'm here. I'm happy you're here. I'm, of course, Big Cheds on Twitter. That's probably where you know me from. This is going to be part of the quick market update series on YouTube. I teach professional technical analysis, Japanese candlestick theory, and classical charting. I try to take the academic, the complicated, and I try to simplify it for you. And pretty much most everything I do is free. I published 3 books, and I'm about to publish my 4th book, The Trading Journal. So I'm making my last book free. I started the Trading Quotes playlist. And I've got weeks 1, 2, 3, and 4 already. Definitely encourage you to check that out. Free version of my cancer memoir, free version of Trading Wisdom. Of course, these books are available on Amazon and Audible. I'm a founding analyst at Bitcoin Live, where I do a twice-a-week full market report every Wednesday and Sunday night without fail. Check out the rest of this great stuff. And if you really want to understand how to trade, you got to start with the Masterclass tutorial playlist. I see so many people making mistakes that would be fixed just by watching that series. So I've got a bunch of tweets lined up, as always, to go over some different altcoins to look at, and then a couple different mistakes I saw some other TA people doing. So we'll get to that as well. And then your questions. I want to make this interactive. I want to add some value. I want to give you an opportunity to ask me a question, one that would help everybody else, one that could, give other people a little bit of insight into maybe a problem you're having, and we can talk about it. So, shoot me a message in the chat. If you're first time here, especially, let me know how you found the channel. Make sure you are subscribed, and we'll have some fun. So thanks for hanging out, folks. Of course, we'll do Ethereum, Solana. Bitcoin, not a ton has changed. We're definitely analyzing the chop here in the middle of the channel. My posture has been to avoid the chop in the middle of the channel and waiting for interaction with key range lows or an overhead trigger. We did start to maybe get a little bit of an overhead, a mid-channel long trigger, and now we're chopping back through it again. So that's the thing where you wait for major interaction. We have the descending supply trend break, and then you wait for 98.5 flip. You get it. Now it's right back into the range. So it's kind of punishing people who are trading this chop range in the middle. We're looking at a 4-hour flat MA200, indicative of just essentially being sideways for 4 hours. A little bit of a bounce back into the range here. But it gets frustrating to trade in this middle of this channel. So you want to start again with outside in, looking at the weekly chart. Beautiful, beautiful weekly trend. Price above all the moving averages. As of right now, we're at or above the EMA 8, which is primary uptrend support. You cannot be bearish with price above a rising EMA 8, especially weekly time frame. Beautiful trend like this above the rising MA 200. And we're just kind of monitoring this nice high and tight consolidation on high time frame, daily range, upper and lower boundary, and some chop here, of course, in the middle. What's going on with Ethereum? We'll take a look at ETH. Ethereum would like to hold 2,700 to start to build some momentum. The peak are roughly the peak of this prior consolidation range here. Starting to do it. Now we're back in, right? So, Ethereum's been underperforming to Bitcoin, so I think you don't want to be rushing into a long on it anyway. I'd much rather be trading some of these other altcoins that are having some nice bounces, and we'll go over them, of course. And we're seeing the relative weakness of Ethereum versus Bitcoin. That's continued with Ethereum versus BTC chart. And Solana, nice little bounce so far off the 160, 165 range. We did notice, and I tweeted out a little bit of a volume cluster developing. We saw that here in the 4-hour. That's indicative. Move down, you look for a volume. You're going to begin likely at least a mean reversion. And then you want to wait and see if it continues. Of course, 190 overhead level, and you see the volume cluster here, the 1H volume spikes. So it's just a nice way to use volume. Price interacting with, I think the last level that it needs to hold is this 160, 165 range. The danger of failing to hold there would really solidify a higher time frame weakening and inability to hold the MA50. You see prior responses, with the weekly with the price versus that weekly simple MA50. So that's a quick rundown of what I promised to do. And I've got some tweets, but let me check in with you folks and see how everybody's doing. Again, I'm doing these streams 3 days a week, Tuesday, Friday, Saturday. I'm trying to put out a lot of free content. And, if you want more, you know where to find it, of course. But that's the right balance for me, these 3 days a week here on YouTube. So let's check in with the chat. What's up, Indy, David, Jared, Satan, Zoxy, and everybody else? Make sure you folks, give me a comment. Give me like a good trading question. I want to hear something that you're dealing with and you're having trouble with, something that you've been trying to do and is not working out. And maybe we can discuss it, and maybe we can try to create some value from that. So let's let these questions build up here in the chat room. I'll go through my tweets that I have that I want to talk about. So can you feel the vibe shift? What does that mean? Well, I've said it many times that, TA is a deadly tool. It factors in, news. It factors in really everything. It's what the value should be. I don't believe in undervalued or overvalued. I think it's a myth. Things are what they're supposed to be. Of course, you have a price trend, but sentiment is remarkably powerful. And you see on this day when I put out the tweet, can you feel the vibe shift? This is right after we had this range low, or middle range sweep and recapture. We were right about 94.5 when I put out that tweet. And it was on this day, February 18th, right? And can you feel the vibe shift? You could feel it. It's terrible. All of a sudden there was optimism. Maybe it corresponded with Michael Saylor, buying more Bitcoin, whatever. You could feel a vibe shift. And already decent response off of that. You went 94.5 all the way to 99.5, which in and of itself is a very nice trade. So I'd say, watch sentiment. Like with Solana, the sentiment was horrible at 160, 165. And so you want to always take an example. You want to take a look out at where sentiment is not matching the price. So can you feel the vibe shift? I put that out. I was kind of giving people a hint that, hey, you can come out of your shelter right now. Come out of the shelter, take a look around. Maybe there's some opportunity. Maybe we're bouncing here. Can you feel the vibe shift? BNX 4H look. So I put out this tweet. When you see me doing this is a very simple tweet. I'm not telling you to buy. I'm not telling you to sell. I'm really not telling you anything other than that I'm putting in front of you a nice chart. I'm putting in front of you a nice piece of meat, a nice piece of fish, something really nice to take a look at. Look at this, 4H look. Beautiful consolidation after the advance. Advance, tightening range, moving averages. Look at all the moving averages catching up, tightened up. Beautiful, beautiful price volume trend. Okay. BNX 4H look. What happened afterwards? Right? BNX 4H look. Boom. Right? We went from like 95 to like $130. So beautiful break from that range. BNX really came on my radar. Bitcoin Live member requested it. And I, right around here. And I saw the volume and I said, wow, like, okay, you want to pay attention. Look at this beautiful accumulation. Sleepy, boring chart. Sleepy, boring chart. Nothing's going on. Drop. Boom. Volume. Accumulation. OBV skyrocketing. Beautiful. And then I put out a tweet. I said 4H look. I'm trying to put good charts in front of you. That's what I do on Twitter. I'm not going to hand you a fish. I'm going to teach you how to fish. That's what I do. But you see this 4H look. It's like, hey, this is a nice looking chart. Okay. So here's something to talk about in terms of a lot of people use Japanese candlesticks, but they just do it wrong. They don't understand the context. And they probably never read, a textbook, never read Steve Nissen, which you need to read if you're going to use Japanese candlestick books. He's got a couple books, yellow cover, the red cover. Have them both right next to me. Yellow one's great. And so there's a couple things that you want to understand that are done poorly here. So, pending reversal candle, not a reversal candle, right? Large body and sideways is muted. So we're doing the Bitcoin monthly. So go to the Bitcoin monthly, which I normally don't even look at because there's no MA200 on the monthly yet. We'll get it at some point. But let's take a look. Clean it up a little bit. So this is when it was down like around here. So there's a couple problems. There's a couple problems with this tweet. And so there's a little bit of a backdoor where he says pending. Okay, I get it. But as of February 18th, we're just a little more than halfway through the month. You do not want to be drawing any kind of conclusion really based on a candle that's not that well formed. Like, for example, on like a Tuesday or a Wednesday, you really shouldn't be thinking about the weekly candle because it's only a couple days into it. It's only halfway. And so, things like oscillators too, like oscillators, they calculate when the candle body closes. So a lot of people are like, oh, monthly this, halfway through, look at the RSI or OBV. You don't have the value for that candle for that period quite yet. So the first mistake is really saying, hey, look, it's a reversal candle. Okay, it's not a reversal candle, right? I mean, that's not how candlestick theory works. You're sideways here. You'd need like a big bounce with like a long upper shadow, some type of a gravestone. Like when you're so that's the first mistake was the fact that it's calling a reversal candle halfway through the candle or even a little bit more. And he gave himself a little bit of a backdoor, and that's fine. But like, what's the point? There's no use in that. So it's kind of useless, number one. Number two, it's not a reversal candle, okay? This is a sideways range now in Bitcoin. You're sideways now 3 bars. A big red candle here wouldn't even be a reversal candle. It would be priced within the range, okay? In Japanese candlestick theory, you want, if you're gonna use it, you understand every candle is short-term signal. There are no long-term signals in Japanese candlestick theory, number one. Number two, you have to consider context. If you want a reversal candle, you would want up, 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 reversal candle, not up, 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 sideways, sideways, reversal candle. That's not how candlestick theory works. That's not how you use it. That's mistake number two. Number three, where's the volume? Where's the volume? You can't use Japanese candlesticks without volume. That's like rule number one. The strength of every Japanese candlestick signal is based on the volume behind it. That's an immutable law, okay? That is the whole point. Like if your whole idea is that this candlestick's representing the psychology of the market, this candlestick is representing, a reversal of force, you want volume behind that reversal to indicate momentum's changed. So for example, move up, move up, move up, shooting star, and it's like big volume, big volume, and then tiny volume. In the shooting star, it's a blunted signal. You would rather have, move up, move up, move up, shooting star, and then big volume. You want volume on the candle. If you see someone talking about candlesticks and they don't show you the volume, you're very safe to ignore everything else they're saying because they're misusing a very fundamental thing with Japanese candlestick theory. I mean, that's about rule number one, right? That's more important, or I could say it's more important than where it comes in the channel, right? Like a hammer candle, you want it at the lower Bollinger Band. I actually ended up talking about this yesterday in like week 3 or week 4 of trading quotes. I went over that. And I gave you some good examples. So go check that out. But so you can't do that. You can't be like, oh, reversal candle, it's sideways and you're not even showing the volume. And the candle's halfway formed. So, I mean, that's just a kind of a complete swing and a miss on this one. And the next one, we had a little bit of a debate about, he has a little bit stronger of an argument, but it's still a pretty weak argument because we'll talk about that, right? MACD weekly bearish crossover, okay? I was talking about hidden bullish divergence. Someone was trying to say like bearish divergence in the 5-day. And I'm like, okay, first of all, 5-day, that's weird, but that's okay. And I went and looked at it. There was actually hidden bullish divergence with RSI, right? Hidden bullish, I'm not even going to drop. I'll just go 3-day. So you've got You got the RSI with the lower low versus higher low in price. That's a hidden bullish divergence. So most of the time when you see people talking about like divergence, bearish divergence, they're doing it wrong because they're using like a bounded oscillator and they're drawing regular divergence. And I've lectured on this a million times on this channel in the Masterclass tutorial playlist, right? I've lectured on it a million times, okay? But I'm like, most of the time when you look, there's a bullish divergence, right? Because they're using RSI wrong. And so there's me kind of poking fun saying, hey, thanks for pointing me to it. And they were like, bearish MACD cross. Well, last time we had a bearish MACD cross, right, we're 50% higher. And the argument is, we had a bearish cross first. We had a bearish cross, then a bullish cross. Well, that's because the price in this moment's in a sideways environment. It's in a consolidating range sideways. There's a couple key differences between where we are now and where we are here. So let's look at that. Let's kind of drill down into detail on that, okay? And for your purposes, I pulled up the MACD. I don't use it. I think it's pretty useless, but that's okay. I pulled it up for the purposes of this lesson. Let's get it nice and big, okay? So there's a couple things you want to keep in mind. If you're going to use a moving average cross, you want to keep in mind the environment, okay? Moving average cross in a sideways environment is muted, okay? This is covered in moving average basics and trading wisdom. I've covered in all my webinars. If your moving averages are generally sideways, like a bullish cross doesn't mean anything because it's sideways. You want a trending market and a moving average cross. You want the cross with momentum. It's the same concept as with Japanese candlestick theory in that you want a reversal candle to come after a move down, a bullish reversal candle, and you want a bearish reversal candle to come, after a move up, right? So a couple differences. So when we got this first MA cross, it was pretty much right after the peak. This pending MA cross is much further into the channel. The moving averages are more sideways. It's an even more muted signal than it was here. And when it happened here, we're 50% higher. So what is a moving average cross in a MACD? It's a 12 versus 26 EMA cross. What's an EMA? Exponential moving average cross, right? I use the 8 and the 34, like Coinbase, which is GDAX back in the day, used 1226. A lot of people use 1226. MACD uses it. But in a sideways environment, a moving average cross is muted. Like if these moving averages are crossing, it really doesn't mean anything because it's sideways. Look, MA50 is rising, getting basically sideways 34. EMA8 especially is sideways. So you want to be very careful. First of all, MACD is it's slow, it's not responsive, and it doesn't tell you anything because no matter what, you're selling anyway on a break of 90K. So why anticipate? Why are we anticipating that the price might do something? Because there's a moving average cross in a sideways environment. You don't want to do that. So the last moving average cross were 50% higher. Last moving average cross was muted, but it was even stronger than here because it was closer to after the initial move up. Here we have move up and we're sideways now, like 10 bars versus 6 before with the prior cross. So it's even weaker potential signal, right? Look at this. Look at this. There's way more sideways here before this potential cross. It's a muted signal, okay? And it doesn't give you anything because you already have very well-defined price range in the daily chart. This is my whole point where you don't need those oscillators. You don't need those indicators because the price is already giving you everything you need. Telling you where to watch. It's showing you where it responds. You're already going to be risk off, paring down your risk on a loss of 90K. We're going to go to 74K. Period. Write it down. Period, right? So that's the problem with using these moving average crosses. You got to be careful out there. People are making calls and candles that aren't closed, looking at candles without volume, not understanding kind of fundamental things about how to use oscillators, how to use moving average crosses. That's my spiel. Let's jump back in the chat room. We got a bunch of messages here. Really nice little group today. Thank you, everybody, for showing up. People are talking about Bybit. I don't know what's going on with Bybit. Whatever. Doesn't really matter to me. If whatever is going on with Bybit matters, I'll see it in the chart. There will be some impact, and I'll use that to guide me. Let's see. Santana, I need to know your opinion about Upthrust. Well, I mean, I love an Upthrust if I'm a bear. It gives you a nice trading setup. Does it need multiple touches? Okay, this is a good question. So, like, when is it really an upthrust? So, what is a level in classical charting, and how do you define a level, right? So, if here's resistance, here's resistance, here's resistance. So, the more times a level is touched, the more important it is in classical charting. Here you'd have 3 touches. And what you want is you want to have, the first thing you want to have is time interval. So you have time interval in between these attempts. Okay. You have 3 touches. So that's reasonable. It's a reasonable level. Then you want to have something called price distance. Okay. So you want to have price distance from the attempt down to a trough or a low. So if it does something like that, okay, then you have, not only do you have time interval, now you have what's called price distance. Okay. Why does that matter? Well, let's say you have the same level here, but then kind of touches it again, then goes down and up here. This isn't 3 attempts. This is 2. 1 and 2, right? Right. So not all levels are created equal, and you have to understand, based on classical charting, how to evaluate a level. Okay. So the more well-defined a level is, it's a great question, Santana. The more well-defined a level is, the easier it is to use an upthrust. So here's your upthrust. Okay, we had it very clearly with the 2021 top. So here's your upthrust. Okay, so you want to find a level that's well-defined. Okay, ideally it comes in a very strong trending environment, not necessarily sideways either. Here you have strong move up. Okay, strong move up into prior range peak. You have essentially 2 upthrusts. You have the first upthrust to the April high, and then you even had a local upthrust here. Okay? There was a lot going on back there, and I've analyzed that a lot in my Masterclass webinar. So that was a great question. Let's see here. Andy says, Jesse Olsen, so many indicators. Well, I'm sure he does fine TA, but maybe he's a better trader than me, and that's okay. But I will continue to call out things that just are not right, and I think it's important to continue to add value. I do find it interesting when people want to argue with the teacher. That's fine. You can say, oh, you're not my teacher. Well, you follow me, okay? And I teach professional TA. Anybody who's following me is a student to me. I'm trying to help you. I'm trying to take the professional, the academic. I'm literally trying to explain it to you because, like, most of these folks just haven't read textbooks, and you can tell because they're misusing things. Like calling this a reversal candle is just, I mean, that was the biggest red flag because it just means you don't understand kind of basics about candlestick theory or classical charting. Jared, what's your thoughts on order blocks? Why don't you use them? Well, does it seem like I need them? You've seen my TA. I think I'm probably one of the best in the world covering Bitcoin, and I don't need that. You know, if any of that order blocks matter, because you can manipulate an order block, okay? I'm not into stuff that you can manipulate. You can pull bids, you can pull asks, you can move things around. I'll wait for the price. I'll wait for the price to interact with the key level. I don't use them because I don't need them. I'm not going to add things. I barely use RSI OBV because most of the time you can see it in the chart, okay? I might even remove the EMA 34 at some point just because I'm trying to be even more simple over time, but I probably won't because I like that 834 cross. You really don't need anything outside the price. And I think people, there's this evolution. When you're a newer trader, you're trying to add more to your system. Let me add the stock RSI. Let me add more moving averages. Let me add volume by price by volume. Let me start doing Fibonacci levels. You start to add stuff thinking that it's like going to give you more information, and all of a sudden you have information overload. And for some reason, you're not paying attention to just key horizontal levels. It's all you need. Now you're trading enough diagonals. Now you're trading because your RSI, your bounded oscillator, right, has a regular divergence. Well, of course it does. It's a bounded oscillator. So you start out by adding these tools as you get older, and if you survive, you're lucky enough to survive and not zero out your account, you start removing those things. And you even see my evolution here on Twitter for the last 11 years, putting out charts. And go look back when I started covering Bitcoin in 2017. Look at the charts I put out then to now. They're more simple now. And you can see I'm deadly. I'm deadly accurate without using order blocks, without using any of that stuff. You don't need it. Sentiment's pretty good. If you're going to add something, add sentiment, okay? All right. David, how can you determine when Bitcoin is topped out? Well, it's going to lose 90K. That's it. David, right? You want to go to the higher time frame. You want to pay attention to the price and look for what would be a big sign of trend, sign of weakening trend, be a loss of this level. This is an unbelievably big level in classical charting. You have the time interval in between all these attempts. You have price distance. This is a mega level. Losing 90K, would it mean like the top? Maybe, but you don't know, but it would be a local top. Losing that would be a big blow to the trend, which is why it's not going to stop at 85K or 84K. It's going to 70K, 74K if it loses here. You can bank on it. So it's pretty simple, actually. Like Bitcoin, most of the time makes it pretty easy for you to pay attention. How do we know the bottom on Bitcoin in 2022? When I put out, how did I know it was bottom when I put out that call to go long at 18.5? Right? Well, it wasn't like that hard. I mean, you had the descending trend break, and you had very simply the price tried to bounce and was thrown back, and then recaptured it here. You just follow the reversing the trend. Simple 2-level filter, recapture of lost support. On the converse of that, or on the other side of that, would be a loss of key support, David. So that's how you can tell, and it's. Sure, you might not get the nut top, but you're never going to get the nut top unless you're lucky. I got lucky in 2021. I made a call based on other things, and it turned out to be right. It's not about nailing the top. It's about riding 80% of the move, getting most of the move, because you want to ride with the comfort of the trend, and that's the whole point. Fana, what's the duration of your average trade? And does your execution or TA based on the trade timeline? Absolutely. So it can definitely change. Like I could enter a trade based on like taking Solana, right? Like taking a trade based on 60-65. I could ride it to 200, or I could ride it and watch for a hard rejection at 185, 190 and take profit there, or maybe no profit if it doesn't even get to that level, which would be my initial target from an entry there. So. Most of the time, honestly, I don't hold altcoins for more than a day or two, and usually less, because I just like to take profit. I grind it, and if I get lucky in that I'm entering at a major level, I've been lucky enough to have a low ball bid hit, or I'm entering, during some kind of an overextension, like here, a volatile overextension. Yeah, then I can ride, and I'm usually only riding maybe 20 to 30% of my original position. I really like to ride free or ride stress-free on a position where I've taken partial profit. So I'm not as much of a swing trader, which is what you might think of as someone who's holding for days and weeks, maybe months. It's just not my style. I don't care about none of these mean anything to me. These aren't projects. These aren't real things. I don't care I don't know what BNX is. I frankly don't care. Doesn't mean I can't trade it, right? I really just means nothing to me. None of these things mean anything to me. I'm gonna take the profit when it's there. I'm gonna ride it, and I'm not gonna for me. This is my style. You could be completely different. I'm not telling you to follow my style. I'm not telling you to follow me. I'll give you tools to make your style better. But I just want to take some profit and then go do other things. I have a lot of projects in my life. I have a lot of things going on. I'm not gonna let my trades own me, and I'm not gonna let them take away my sleep. That's so important. You got to have a good sleep at night, okay? All right, let's see here. Great questions so far. I need a big Cheds orange ski mask. That's awesome. Well, I'm actually going to be doing a long form interview with somebody you know quite well, a very solid TA guy on YouTube and Twitter, and I'll probably will don my magic mask and robe for that, but absent that, I'm not so much into doing that anymore. I'm putting out a ton of content you can see on YouTube, but you don't need to see my mask and all that. I'm just chilling. Let's see, maybe we'll do a couple more. It's already 30 minutes, so let's wrap it up. Okay, hold on. What learning material would you recommend to learn Japanese candlesticks? Great question. Well, I'm glad you asked. You want to watch my Masterclass tutorial playlist. I explain all the key basics of Japanese candlestick theory, what the different candlesticks are, how to use them, the context. It's very important to use them in concert with Bollinger Bands and with volume. Then you want to read Steve Nissen's Japanese Candlestick Charting Techniques book, the yellow cover book. It's really good. You got to read Trading Wisdom. I mean, I talk all about it in Trading Wisdom. I'm not sure if I have it so much. See, the free version of Trading Wisdom, the first 18 lessons are heavy on like the trading psychology. And I get more into like the technicals and kind of the latter half of the book. You got to buy, it's a great book. You'll definitely enjoy it. I mean, the reviews are unbelievable. It sold 15,000 copies. And by the way, Trading Quotes is like very heavy trading psychology. I really think you folks will like that. Especially newer traders. This is part of the Quick Market Update series on my YouTube. I'm streaming on Friday, Saturday, and Tuesday. I'll be doing another one tomorrow. I really want to continue to create value. I want to put out content, and that's this is a nice way for me to do that. Light coverage of the charts. I talked about a few things. If you're looking for long form, in-depth analysis, that's Bitcoin Live twice a week, every Wednesday and Sunday night. And it's with the best team in the world that studies crypto. When you sign up, you get access to not just my stuff, but all of their stuff. I have published 3 books. I have a 4th book coming, the Trading Journal, Trading Wisdom Part 2. So I'm making my 3rd book absolutely free. Check out the playlist. I'm reading them. I think it might even be better than the printed book. So you don't even need to buy it. Just go, watch this playlist. My books are available on Amazon. They're on Audible as well. Watch the Masterclass tutorial playlist. And if I didn't get to your question today, I do apologize. I don't like to go more than like 30 minutes. I could spend all day answering these questions. So I hope you've enjoyed your time here. Let me know if you like it. Let me know if you don't like it. Leave me a comment either way. And make sure you're subscribed. Show some love. And I will be back tomorrow. And we'll do it again then. All right, folks. Thank you so much. It was great to have you. And I will talk to you soon. Big Cheds out. Peace out. Thank you, folks.